Good morning. Welcome back to the Broadcast Retirement Network. This is BRN AM for Thursday, June 20th, 2024. And our top story today, we're going to take a closer look at value investing. And joining me now to discuss this and a lot more, Kevin Holt is the Chief Investment Officer, U.S. Value Equity for Invesco. Kevin, so great to see you. Thanks so much for joining us on the program this morning.
No, I appreciate you having me, Jeff.
These are really interesting times in terms of the market, in terms of the economy. We're going to talk a little bit about value investing this morning, but basic question for you, for myself, and for the audience: how do you define value investing?
Yeah, it's interesting. It's an interesting question, Jeff, and it has somewhat changed over time. Just with the constitution of technology and services, are a greater percentage of the S&P than they used to be. So, historically, price to book had a lot more relevance. Right now, it's really relegated to kind of financial stocks and then some deep cyclical stocks, steel stocks, things like that. But the majority of the market, we're valuing on cash flow and normalized cash flows, trying to say, okay, what's your normal level of revenue? What's your normal level of margin? And then what's your normal level of cash flow? And then looking at that cash flow relative to your return on invested capital. And that's really, at the end of the day, cash flows are how we define value for most areas, with the exception of financials and some deep cyclicals where asset-based metrics work a little bit better.
And when you look at today's market, stock market and the economy, does it favor value investing? And so my point, does it have things kind of come full circle and now value is really favorable?
Yeah, I'd say yes and no. So in two ways. One, on a historical backdrop, if you look when you have an inflationary environment of 2.5% or greater, going back 100 years, value does very well versus growth. You have commodities with pricing power, you have higher net interest income for your banks, which are more value categories. The reason I would say no is we have to be cognizant and honest with ourselves about the innovation in technology, the internet. So as technology and innovation continues to happen, that's going to favor growth a bit. But the economic backdrop of inflation being 2.5% or higher, with what appears to be a tight labor market and probably won't change in the foreseeable future, that backdrop lends more to value. So, post global financial crisis, rates were zero and we had innovation. Not a great backdrop for value. Now we have more of a, is the Fed going to raise rates? Are they going to lower rates? We have some inflation, which is very conducive historically to value, which I think gives us, I call it a more level set playing field for value going forward. So I think you definitely want to pay attention to value more than you did post GFC with zero rates.
And Kevin, you brought it up, the Federal Reserve, that decision, the interest rate decision, how does that factor into value investing, but also stock selection? Because everything that I've read, it's all about interest rate cuts and the market.
Yeah. Again, it goes back to what is normalized. So whether you're looking at a financial stock, looking at normalized credit trends, whether you're normalized net interest income, which is where they make a lot of their money, or if you're looking at retail sales for retail companies or technology, again, it comes back to normalized. And that's what we're trying to get at. So I think you have to just be very pragmatic in your approach. With that said, it's tough to know where the Fed's going to go. And I, as a true value investor, have a 5 to 7 year time horizon. So I pay attention to the economy and I want to be cognizant of anything black swan events that could be out there. With that said, I'm not trying to predict short-term changes. So it's my opinion right now, the next move is likely down. It may not be till 2025 because the economy appears to be relatively strong, but it will weaken. The next step is it will weaken. We just don't know when it'll weaken. So we're looking for stocks that we can buy that maybe are discounted because people are concerned that rates won't go down for 6 or 9 months. So we try to take advantage of that time arbitrage, being long-term values investors, looking at what is normalized as opposed to, hey, trying to predict what's going to happen in the next 3 months, which is very, very difficult for any investor.
Yeah, and personally, I like the fact that it's long-term investing. That's my own personal opinion. Kevin, just kind of build on that. Given the inflationary pressure on the consumer, are there certain segments of the economy, knowing that it's a 5 to 7 year time horizon, that stick out to you, that pop out when it comes to value investing?
Yeah, so the key in an inflationary environment, and this is so different than anything we've experienced since the early 1980s, which predates most of us in the industry, you need people with pricing power because you have to be able to price for that inflation, for labor inflation, for cost of goods inflation. So you need industries that have pricing power. So historically, consumer staple stocks have pricing power. There are certain consumer staples you have to have. So those will have a certain amount of pricing power. Commodity stocks, as long as you don't have an oversupply of a commodity, for example, oil, you will have pricing power in oil, in its inflationary. So a lot of commodities will do better. As I talked about, a perfect kind of recipe for financials is a little bit of interest rate. We have good net interest income, but not enough inflation to create a credit crisis. So that creates a very interesting backdrop for that. So all those sectors I just talked about have interesting backdrops, a little more value orientation, but it comes down to you need something that someone really needs, and do you have the pricing power to offset what is an inflating cost environment within your expense base?
Well, Kevin, I need to take a very quick break. When we come back, we're going to talk about where value investing fits into an institutional or an individual portfolio. You're going to want to stay tuned right here on BRN AM. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device. Welcome back. We're joined this morning by Kevin Holt. He's the Chief Investment Officer, U.S. Value Equity for Invesco. Kevin, thanks so much for sticking around with us this morning.
Good to be with you, Jeff.
Yeah, this is a fun conversation. And I want to start off this segment by asking, just as I kind of teased going into the commercial break, where does value investing fit into an institutional or an individual's portfolio?
Yeah, so I'm a big believer in diversification, so I think you need to have growth and value within your portfolios. As I alluded to in segment one, with inflation being more predominant than it's been really for the last 20 years, it's even more important to have value exposure now, given that value historically has done better in an inflationary environment. So I think you need both all the time anyway. I think it's even more important now that you readdress and make sure you have the proper value representation in your portfolio, given that value typically does better in an inflationary environment historically.
And when we talk about the individual, that could be an IRA, or it could be the 401k or a 401k like plan. Where does value investing fit into that long-term horizon, especially when it comes to saving for retirement?
Yeah, I think it's really important, and I'm a big believer in our contrarian value strategy. But having a 5 to 7 year time horizon is very different than what you're going to hear about in the media, and I think that's a competitive advantage. The returns are less correlated with the overall market, given the contrarian nature and the long-term time horizon. The focus on valuation gives you downside support, so you don't have as much risk over a long period of time horizon. I think within that framework, you want to have value. You want a long tenured manager, because it's going to diversify your returns and give you exposure that maybe investing just solely in growth will not give you.
And Kevin, we're talking about value this morning, but does it need to be an either or between growth and value in a portfolio? You have to have it all in one bucket or the other bucket?
Yeah, I personally believe in diversification. I can't predict the future. There's a lot of things that have happened a lot of things happened the last 10 years that I couldn't predict. So I do think innovation has been remarkable the last 10 to 15 years. With that said, inflation is here. I see a better backdrop for financials, for some energy stocks, for some consumer staples. So I really do think you want a diversified portfolio at this point in time. And that's going to give you your best risk return, particularly over a long period of time, which is what these retirement products do for you.
And Kevin, a lot of the individuals watching the program this morning, they may be participants in a retirement plan. They may be plan sponsors of a retirement plan. They may be fiduciaries of a retirement plan. Is there anything special about performing due diligence and the underlying investment of a value investing product?
Yeah, and I'd say this goes for all products, but really trying to understand the investment process and the strategy. That is really kind of the foundation of any investment fund. So, looking at the investment process, does it make sense to you? Is it repeatable? For a value investor, typically the most, our biggest Achilles heel are value traps. How do value investors, particularly in each fund, address value traps and try to limit those? And then, the final piece is, really what is the tenure? Typical value investors have longer time horizons than growth investors. So, hey, do I have a management team that's been in place a long period of time that's been able to show, hey, they can execute on this strategy. It's consistent. It does what I expect. So it may be out of favor at certain times because it's contrarian, but relative to my overall portfolio, it's really adding value over a long period of time.
And so, Kevin, just to kind of wrap things up, it's a lot. It sounds like, I don't want to put words in your mouth. It's a lot more than fees. It's a lot more than just performance versus the benchmark. There's a lot that you have to understand when you go under the hood of a value product, but an investment product in general.
Yeah, and I really do think there's a lot of product out there, but looking at how good that investment process is, how long has that team been in place, how repeatable is this? I think is very, very important. In what is a very, very competitive environment, but ultimately for your 401k and retirement type vehicles, you want to have anti-correlated returns. You want a great risk return over a long period of time, so you can afford to have the patience, which kind of feeds into value investing. And I think that's going to give you the best experience and give you your best retirement outcome at the end of the day.
Well, Kevin, very interesting conversation. We really appreciate you joining us, and we look forward to having you back on the program again very soon.
Appreciate it, Jeff. Thanks.
That wraps up this episode of BRNAM. Have a topic of interest, someone you think we should talk to? Drop us a line. And don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? Well, then visit our website. Hey, we're back again tomorrow for another edition of BRN AM. We'll have a very special guest and another important topic. You're not going to want to miss it. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.